I'm so extremely excited to be with you on today. We're going to get into some very good things today, and I want you to understand your level is literally a trap. And we're going to show you what's going on with your credit scores and how you need to respond so that you position yourself to be in a better, absolutely much better place. And so we're going to get into that on today. Well, let me ask you a question. Do you know exactly how much money you are losing right now today? Just because of which credit level the system put you in. Not your score, your level. And this is important. We've got to understand the level, because the truth of the matter is most people think that their credit score is a grade. And I want you to know today it's not. It's not. It is a pricing bracket. And the system designed every bracket to extract maximum money from you at every single level. And so we've got to get this right. We've got to do this as we're coming in on today. Listen, I've been doing this for 37 years. I've watched the system evolve from a single risk assessment into what is now a tiered extraction machine. And here's what I've noticed. The people who understand the levels don't just improve their score. They stop being priced. They start being positioned. So today I want to walk you through what happens at every credit score level from 300 to 850. What each level costs you, what each level unlocks, what the system built into each bracket to keep you and me paying, and what not to believe about where you are right now. And I'm going to show you something most people never catch. The one level where the system actually loses money on you, because at that level you stop being profitable to them, and they don't want you to know which one it is. Stay with me today, because this is going to change how you see your entire financial life. Now, before we get into this, do me a favor real quick. Drop your current credit score range in this chat or in the comments right now. Just the range. Don't drop your exact number. Are you in the 300s, the 500s, the 600s, the 700s? Are you above 800? Drop it in the chat or in the comment. I want to see who's in the room. I want to see it. Now, I see you. I appreciate you being here on today. Listen, whatever you are today, and I want you to get this part because it's going to be critical. Whatever you see yourself as and wherever you are, I want you to understand something. That number is not your identity. I see those scores. It's not your identity. That number is your price tag. And today I'm going to show you exactly what that price tag costs you and what the system does to keep it right where it is. I see the 430s. I see the 600s. I see you there. Listen, let's talk about the real problem. The system doesn't see 300 to 850 as a spectrum. It sees levels, discrete brackets with hard handcuffs. And here's what most people don't understand. The difference between 680 and 681 isn't 1 point. It's a pricing cliff. Everything changes at that line. Your interest rate, your premium, insurance premiums, your deposit requirements, every single thing. 1 point, one cliff, one system. And it's not just one cliff. There are 5 of them set up in this 300 to 850 system. 5 lines drawn by the system, and every single one of those lines was put there on purpose. Not because you ask or your risk changes exactly at that point, because that's where the pricing model simply resets. I'll give you a real example. 2 people apply for the exact same auto policy on the same exact car, same zip code, same driving record. One is a 680. The other one is a 681. The person at 680 pays a higher premium, sometimes by hundreds of dollars a year, for being 2 points lower. Not because they're a worse driver, because the system rate table has a line drawn at 681. And they landed one number on the wrong side of it. So today we're going to walk through every single level. At each level, I'm going to show you three things: what it costs you, what it unlocks, and what the system built into that level to keep you there. So it's important that you stay with me today. If you're learning something already, do me a favor, hit the like button. We want many people to see this so they can be on top of this information just like you. And subscribe if you haven't already, because today this is one of the conversations most people never get taught. Now let's start at the bottom. 300 to 579. The system calls this deep subprime. But I want you to hear what I'm about to say very carefully. This is not bad credit. This is the system's highest profit bracket. Let me give you a quick story. I had a client, I'll call him James. James was at 520. He went to buy a car. $14,500 was the price. Nothing fancy. The dealership approved him at 22% interest over 72 months. James was going to pay over $10,000 in interest alone on a $14,500 car. That means the system was making more money off James than the car itself was really worth. Now, here's what most people don't see. At this level, everything is stacked against you, not by accident. Interest rates are 18 to 25% or higher on auto loans, 25 to 30% or higher on credit cards. You're paying a premium on everything you touch. Deposits, apartment complexes charge you 2 to 3 times the normal deposit. I've seen clients hand over $1,500 to $2,000 before they sleep in the apartment one night. Insurance, auto insurance premiums can run 50 to 70% higher at this level. The system charges you more to drive the same car on the same road as somebody at 750. Utility deposits, electric, water, gas, all of them require deposits. 200, 300, 400 each, because the system has already decided you're a risk before you've even turned the lights on. And here's the part nobody talks about. None of those costs show up on a single bill where you can see the total. They're scattered. A little extra here on the car note, a little extra there on the insurance, a deposit here, a deposit there. The system spreads the extraction out so you never see the full number. If you added it all up, James wasn't just paying for a car. He was paying a tax every single month just for existing at 520. And the system has a name for this. They call it risk-based pricing. I call it what it actually is. Pricing based on the bracket they put you in, not the actual risk you represent that month. So think about this. James at 520 is paying more for his car, more for his apartment, more for his insurance, more for his utilities, all because of one number. And the system calls this risk assessment. I call it what it is. A tax on people the system has already decided are profitable to keep down. Here's what I want you to remember about level 1. The system does not want to help you leave this level quickly. The slower you climb out, the more they extract. That is by design. Now, let's move up. 580 to 680. The system calls this fair. I call it the comfortable stage. This is where most people land after they've been through some kind of financial disruption, maybe a medical bill, maybe a late payment cycle, maybe a divorce, and the system gives you just enough to feel like you're making progress. But here's the trap. At this level, you get approved, but at what cost? At 620, you can get an auto loan, but you're paying 10 to 15% interest. At 650, you can get a credit card, but your limit is 500 to 5,000 and your APR is 26%. At 660, you can get an apartment, but you're paying a higher deposit than the person at 740. The system gives you access at this level, but the access comes with a tax. Every approval is a leash. Every yes is a surcharge. Let me give you another story. I had a client, I'll call her Patricia. Patricia was at 640. She got approved for a furniture store credit, $1,200 limit. She bought a living room set. She thought she was making progress because she got approved. But the interest rate on the card was 29.99%. She made minimum payments for 2 years, paid $700 in interest, still owed $900 on the furniture. The system gave her a yes, and that yes cost her more than the furniture itself. This is what the system does at level 2. It gives you just enough access to keep you spending, but the terms are designed so you never quite get ahead. You're paying for the privilege of being in debt. And I want you to catch this because it's easy to miss. Patricia didn't do anything irresponsible. She didn't overspend. She bought a couch, a normal, responsible purchase. The trap wasn't her behavior. The trap was the terms she was given for being at that level. That's the part the system never tells you. At 640, you're not being punished for bad decisions. You're being priced for the bracket you're standing in, no matter what decision you make inside it. Now, here's what not to believe about level 2. Do not believe that getting approved at this level means you're winning. You're not. You've been given a longer leash. The system hasn't released you. It's just giving you more room to generate interest. The approval is the trap. The terms are the cage. The real lesson is this. At level 2, the system profits from your hope. You hope you're making progress. The system hopes you keep spending. Both of you get what you want, but only one of you is actually winning. Now, we're at 681 to 739. The system calls this good. I call it the maintenance tier. And this is where most people plateau. That's not an accident. At this level, things feel different. You get approved at reasonable rates, 6 to 8% on auto loans, 15 to 18% on credit cards, normal deposits, normal insurance premiums. You feel like you've arrived. But here's what the system doesn't tell you. This is where you're most valuable to them. Let me explain. At 300 to 579, the system makes high margin, but on fewer transactions. And this is important because you get denied for most things. At 580 to 680, the system makes high margin on more transactions, but some of those are default. At 681 to 739, the system makes moderate margins on most transactions, and it's the most. You're approved for everything. You carry balances. You pay on time. You generate consistent, predictable, reliable profit. You are the system's ideal customer, not the person at 520. You, the person at 720. I'm going to say that again. The system doesn't want you at 850. It wants you at 720. That's where you're most valuable to them. Let me give you a story. I had two clients, same income, same age, same debt load. One was at 680, the other was at 740. The one at 680 paid $4,200 more in interest over 2 years than the one at 740. Same spending, same habits, different level, different price tag, same person, same habits, but different positioning. And that made all the difference. Now, here's the part that should bother you. Both of those clients thought they were doing the same thing, same paycheck, same bills, same discipline, but the bank wasn't pricing their behavior. It was pricing their bracket. One of them was getting charged a comfort tax for being 60 points lower, even though his habits were identical. That's not risk pricing. That's bracket pricing. And the system needs you to believe it's the first one because the second one makes them look exactly like what they are. Here's what not to believe about level 3. Do not believe that 720 is good enough. The system tells you it is. Your bank tells you it is. The credit monitoring app tells you you're in the good range with a green check mark. That green check mark is not a celebration. It's a receipt. The system is confirming that you're in the bracket where they extract the most consistent profit from you. That's not a win. That's a maintenance plan. Now, we move up 740 to 799. The system calls this very good, but I want you to understand what actually changes at this level because it's not just better rates. It's a shift in who has the power. At 740, you stop being a high margin customer. You become a negotiation threat. The system has to offer you better terms, not because they want to, but because you now have options. And options are the one thing the system cannot price. Come on, make sure you heard that. Options are the one thing the system cannot price. At this level, auto loans drop to 4 to 6% on a $35,000 car. That's thousands in interest savings over the life of the loan. Credit card APRs drop to 12 to 16% and sometimes lower. And more importantly, you start getting offers. The system starts competing for you to send you. Mortgage rates improve drastically. The difference between 681 and 740 on a $300,000 mortgage can be $100 or more per month. That's $36,000 or more over the life of the loan. One level, $36,000. Insurance premiums drop. No more elevated deposits. No more surcharges. Deposits get waived. Apartments, utilities. The system stops charging you just to exist. But here's what's interesting. The system makes it harder to get to 740 than it needs to be. Not because the behavior is harder, because at 740, you stop being their ideal profit center. You become a cost to them. And the system doesn't like costs. So what does the system do? It builds friction into the climb from 720 to 740. Small things. A late payment that stays on your report for 7 years. A utilization calculation that penalizes you for using the credit they gave you. A scoring model that changes the rules every couple of years. FICO 8. FICO 9, FICO 10T, VantageScore 4.0, each one recalibrating the goalpost just enough to keep people from clearing the bar. I want you to sit with that for just a second because most people think the scoring model gets smarter every time it updates. It doesn't get smarter, it gets stricter. in very specific places for very specific behaviors. The system doesn't update the model to help you understand yourself better. It updates the model to keep the bracket sizes exactly where they want them. If too many people start crossing 740, the model shifts the line. That's not an update, and it's not an upgrade. That's a moving goalpost, and you're the one running toward it. Here's what not to believe about level 4. Do not believe that reaching 740 means you've beaten the system. You haven't beaten it. You've just become less profitable to it, and the system adjusts to that. It will find new ways to extract annual fees on premium cards, longer loan terms that look better monthly but cost more over time, identity monitoring subscriptions. The extraction doesn't stop. It just changes its form. Now, we're at the top. 800 to 850. The system calls this exceptional. And this is where I told you something interesting happens. This is the level where the system panics, not because you're risky, because you're unprofitable. At this level, you get the best rates on everything. The lowest interest, the waived fees, the premium offers. The system gives you everything because it has no choice. You've reached a level where every lender wants you, and that competition drives your costs to the system down to almost nothing. Think of that. At 520, the system made $10,000 off James on a $14,500 car. At 820, the system makes maybe $1,500 on a $35,000 car. You're borrowing more money and they're making less profit. That's the level the system doesn't want you to reach. And here's the part most people miss. The system makes it harder to get there because it needs to be harder for them. Not because 800 requires perfect behavior, because it doesn't. 800 requires you to understand the system's data patterns, not just follow the rules. I got to say that again. The system makes it harder to reach 800, not because the behavior is harder, but because the understanding is harder. They don't reward effort at this level. They reward positioning. The person at 800 isn't doing more right things than the person at 720. They're doing different things. They understand things the person at 720 doesn't. And that understanding is what the system is really gatekeeping. Let me give you one more story. I had a client, I'll call him Robert. Robert was at 715, good income, paid everything on time, never missed a payment in 10 years. I said 10 years. He couldn't get past 720 to save his life. He was doing everything the system told him to do. Pay on time, keep balances low, be patient. But the system's advice is designed to keep you at 720 to 740 at most. Robert was following the maintenance plan, and the maintenance plan maintains. It doesn't elevate. Same person, same habits, but different positioning. And this is what makes the difference. Here's what changed for Robert. Not his payment history, not his income. He stopped asking, what do I do? And started asking, what is this number actually reading? Once he understood that the score wasn't grading his loyalty, it was reading a pattern in his data, the path opened up. He didn't work harder. He worked differently. And in less than a year, the number that had been frozen for a decade started moving. Here's what not to believe about level 5. Do not believe that 850 is about paying everything perfect for 20 years. That's the myth the system sells. The real path to the top level isn't about doing more right things. It's about understanding which data patterns the system actually rewards and which ones it punishes you for, even when you're doing exactly what they want you to do. Come on, you got to get this. Now, let me bring it all together because I want to talk about what not to believe at any level. Do not believe that your level reflects your worth. It doesn't. It reflects your pricing bracket. Do not believe that moving up one level means you've escaped. You haven't. You've been moved to a different bracket with a different extraction rate. The system upgraded your sale. It didn't open the door. Do not believe the green check mark on your credit monitoring app. That check mark is not a celebration. It's a confirmation that you're in the bracket where the system wants you. Do not believe that the system wants you at 850. It doesn't. It wants you at 720. Comfortable, profitable, stuck. And do not, this is a big one, do not believe that the rules the system gives you are designed to get you to the top. They're not. The rules are designed to get you to the middle and to keep you there. The real lesson is this. The system doesn't fear people with bad credit. It fears people who understand the levels, because those people stop playing by the rules and start playing by the patterns. This is so important. So here's what I want you to remember. Your credit score isn't a ladder you climb. It's a pricing menu the system reads from. Every item on that menu has a profit margin, yours. Every level was designed to keep you paying just enough to stay, but never enough to leave. The system doesn't want you at 300. It doesn't want you at 850. It wants you at 720, where you're comfortable enough not to leave and profitable enough not to question. The question isn't whether you can improve your score. The question is whether you understand which level you're actually in and what the system built that level to do to you. Because once you see it, you can't unsee it. And once you can't unsee it, you stop playing their game and you start positioning for yours. Now, before we close, I want to share this very personal. When I was 18 years old, the very things I taught you, I didn't understand them. I came into a system at that time with optimum credit. That was the way they did it then. And I got 4 credit cards, and the system began to check my patterns. Here's what my patterns were. I was spending and couldn't afford to pay. And the system was liking it because it was now able to start taking these points away from me and assigning me to a bracket. I ended up at 529, level 1. Late payments, charge off, hurt. I had to study 18 months consumer law so that I could understand not the rules. What were they checking for? What were the patterns that was of interest to them? And so once I learned those things after 18 months of studying, I began to apply them to my personal credit. And I got myself where I ultimately needed to be. I started writing a booklet, teaching some classes, eventually started a business. That's 37 years ago today. And today it is just as true now as it was when I was 18. If you don't know the patterns that they're looking for, they are going to keep you in a bracket that is advantageous to them. Now, before we close out today, I want to walk you through a few questions I get asked all the time. Because if you're sitting there thinking about your own number right now, one of these is probably running through your head. The first one, how do I get from 620 to 700 fast? Here's the thing. The question isn't speed. The question is understanding what's keeping you at 620. Because the thing keeping you there isn't a behavior gap. It's a data pattern gap. When you understand the pattern, the level changes on its own. The second one I get asked, is 750 good enough? Good enough for what? Good enough for the system? Absolutely. That's right where they want you. Good enough for you? That depends on whether you want to stop being priced or start being positioned. The third one, does the system really penalize you for using credit? The system doesn't penalize you for using credit. It penalizes you for using credit the way they told you to do it. There's a difference between following the rules and understanding the patterns. Listen, the system is going to tell you how to do it so that they make your money. But once you learn the patterns, you're going to do it on your terms, and you're going to watch how they must reward you. One keeps you at 720. The other gets you to 800. The fourth question, if I pay everything off completely, won't that just fix it? I hear this one constantly, and no, not by itself. Paying things off is necessary, but it's not the same as understanding the pattern. I've seen people pay off every card to zero and watch their score barely move because the timing of when they paid mattered more than the fact that they paid. Remember, the cliff we talked about earlier, the system isn't just watching what you do, it's watching when you do it. The fifth one, will closing my old accounts help my score? Almost never. Closing an account doesn't erase the history. It just removes the room the system uses to measure how much of your available credit you're actually using. Close the wrong account, and you can watch your utilization spike and your score drop, even though you didn't borrow another dollar. The system rewards space. Closing accounts shrinks your space. And the one I probably get more than any other is this one. Why did my score drop when I did everything right? Because somewhere in there, everything right was based on advice built to maintain you, not elevate you. That's not failure. That's the design working exactly the way it was built to work. The system isn't broken when this happens to you. It's working perfectly, just not for you. Just not for you. If you recognize your own situation in any of those 6 questions today, that's not a coincidence. That's the system doing to you exactly what it does to almost everyone in this room ever going to watch this video. Do me a favor real quick and subscribe to this channel. Hit that like button because we want a lot of people to see this so they can be on top of this information just like you. Drop a comment below. Let me know which level are you in right now. And did you realize what that level was actually designed to do? Because once you see it, you can't unsee it. And if you want to go deeper in understanding the system's data patterns, not the rules they give you, but the patterns they actually reward, that's a conversation we have inside my CBL Wealth Blueprint. The link for all of it is in the description. Listen, this was put together specifically for those individuals who says, you know what? I'm tired of playing by their rules. I want to understand the game because the game is not about the rules. It's about the patterns they are watching. You be blessed. I so look forward to talking to you again real soon. Have an awesome day, and thank you for watching and sharing this video on this fantastic channel. You be blessed. Take care.